Hello and welcome to Policy Watch, a packed snapshot of the week's biggest business and economy stories, their context, their relevance and economic impact. I'm Govindraj, Ethiraj. India's infrastructure sectors have reported their highest growth in 16 months in March 2016, with the index rising 6.4%. Now, the reason for this is a sharp rise in the output of cement, electricity, fertilizers and refinery products. Now, economists have cautioned that this could be because of a base effect, which means a lower figure last year is leading to a higher figure this year. But the larger question is, are we seeing definitive signs of economic recovery or growth? Where is this happening and to what extent? More importantly, what should we be watching out for in the coming quarter if we were to draw policy prescriptions? To discuss this, I'm joined by Saugata, Bhattacharya, Chief Economist at Axis Bank, and Anjali, Verma, Economist at Phillip Capital. Thank you both for joining me. Saugata, let me begin with you. I know that there is a base effect at play here. So we are seeing a strong number this year because the number last year was small. However, there seems to be definite upticks in areas like cement, refinery and petroleum products, right? So why is that? Or rather, what is this reflecting?
So, as you said, I mean, about 3% of the 6.4 is probably due to a base effect. Difficult to say, but probably due to a base effect. But together with this, the rest of the 3.4%, fertilizers, although the share is small, is with a 22%, 23% growth, has contributed largely. And that's probably because of the effects of drought with the fertilizer trying to compensate for water. Cement growth has been strong. Cement growth has remained strong. Electricity growth has also remained strong. But together with this, there are other problems with electricity because, I mean, the market rates for electricity have come down sharply. So it's, I mean, people are buying more electricity, whether it's corporates, individuals, but demand is still sluggish, as a result of which the power purchase agreement electricity prices have remained relatively weak.
Is that a contradiction? I mean, you're saying demand is sluggish, but on the other hand, you're saying output is up.
No. The deficits that we see in electricity are down to pretty much record lows, if not record, very close to the levels. So there is a lot of unmet demand for electricity, and now with transmission lines having come in, electricity capacities with coal having made possible electricity generation, electricity companies are generating more. Right. However, I mean, with this, so I mean, unmet demand is being filled, but it's not as if demand is going through the roof. Right. So that's the electricity story. Cement is doing very well, as you mentioned. Cement is probably one of the reasons is that there is some amount of residential construction. So that's one. Together with this, the road construction particularly, and cement, as you know, is a very regional phenomenon. So cement demand in the east, cement demand in the south remains fairly strong. In the east, I'm told that this is due to a lot of road construction that is happening in the northeast areas. Yes. And northeast areas, a lot of bridges, culverts, etc. are needed. So that's one reason why it's cement production. So I mean, together in this, it does show some signals of a gradual recovery. I think a lot now depends on how rains perform. I think we are on the cusp of something. If the rains work well, then I think you'll see a fairly rapid revival of demand.
Right. So, but you're saying whatever that we see today in terms of growth is really confined to these three areas: cement, electricity, fertilizers.
Well, there is also some even capital goods. I mean, the extent that we had thought that capital goods will do poorly, and we think this is likely to be seen in the IIP numbers as well. You are seeing the effects of the government contracts for roads, for urban transport, for urban infrastructure, for sanitation projects, for power transmission projects. They are beginning to become visible in the order books and in some of the results that I think you will see of the smaller and medium engineering companies.
Right.
So I think, I mean, it's still, the magnitudes are still small relative to the overall potential demand there is in the system. Right. But I think we are moving
I'll come back to cement in a moment, because that to me seems like the one factor which is fundamentally different from maybe the previous year, because there's so much of extra demand that's being created thanks to the government's projects. Right. Maybe in this case than others. Anjali, what are you picking up from these numbers?
So yeah, I think there is a pickup in fertilizers, in electricity and in cement, as you have said. In fertilizers, one thing that I would want to highlight is that we are seeing a significant pickup lasting for the entire year. It's not like one-off. And also imports of fertilizers continue to remain quite strong. So I think there is a sharp, improvement. One is in demand and one is also in the supply. According to me, it is happening because the gas prices have fallen, and earlier the fertilizer plants were working at with a capacity of 70%, which has definitely moved up. So earlier there was a demand and supply gap, which I think in time will come down.
Right, but so, again, this was sort of the fertilizer question. So you're saying that people are consuming more fertilizer, though there is a drought though there is water shortages, and obviously people are using that fertilizer to plant
No, I'm not saying that they are using more.
Yeah.
There was demand always, but supply was falling short of demand.
Okay.
So now supply is, picking up. So
Okay.
the demand-supply gap that was there earlier, would have squeezed.
So
after
this
the gas
increased
prices have come down.
fertilizers intake, would that translate into something else in terms of output, or it's too early to say?
Too early to say. I
Okay.
mean, I think what can also happen is that if there is good monsoon and kharif sowing is good, then this fertilizer output which has happened in this half a year's time can be used going ahead.
Right.
So let's take
Right.
it like that.
But that's an
Yeah.
interesting point, and Saugata, let me come back to you. So there is obviously latent demand, right? At least as in the case of fertilizer. Does this extend to other areas as well?
Fertilizer, I'm not sure. I think fertilizer usage, increased fertilizer usage, the last time you saw that was in June and July of 2009. Again, a fairly severe drought period. So I think fertilizer is being used to compensate to a certain extent, and Anjali is of course right because of the lower gas prices after the RAS gas deals and things. I mean, so you are beginning to get more feedstock into the plants, and they are able to supply that demand. I think there is latent demand to a certain extent in some areas, some pockets. I think in the urban areas, rural, of course, after 2 years of drought and with government transfers having come down from the levels that we had seen in 2009 and 10, I think it's reasonable to expect that rural demand would be relatively muted and moderate. But I think there are pockets of demand for some, even for consumer goods, say for instance. You're seeing relatively steady growth numbers for some of the companies that we have seen in the Q3 and some of the early numbers that we are beginning to see in Q4. So there is, I think it's not wild, exuberant demand, but
Of course, single digit, but
single
still,
digit, but I think it's a stable demand for a lot of commodities, and we are beginning to see some hirings, etc. So that seems to be adding to a bit of urban demand. How long this last? A lot of the hiring is because of the new age, the digital, the e-commerce companies, and so on. I don't know how sustainable that segment of demand drivers is likely to be. That's an interesting.
Right, but let me just one last question on the demand part. So both cement and electricity, as you point, both electricity and fertilizers were in some ways are showing an uptick because of latent demand.
I agree.
Right?
I agree.
Is there a lesson in there that if you were to really step up supply, bring down prices, that you would actually see more demand going up, which may not be there today because of the price factor?
Difficult to say, but I think what we have seen in the past, that the Indian consumers being, this is the storied Indian consumer being very price sensitive and so on. So I think if supply comes in, if prices begin to fall, I think discretionary incomes begin to rise with lower borrowing costs and so on. I think that extra amount that's available for discretionary spending, I think that will kick in.
So Anjali, again, just to look at the other components of those 8 industries which make up the core sector. So there's steel and coal is something that we've not talked about. Coal is of course linked to energy and electricity. What's your sense there? Are they also looking as buoyant as the rest?
Coal was looking much better last financial year than this financial year. So it did quite well in the first half of this financial year. But in the last 6 months, it has come off. Now the reasons for that I have been reading is that coal plants are ready to supply a lot more, but demand is not sufficient. So I was reading that Coal India has kind of shut down couple of plants because there is no sufficient demand for the production that they are making. So I think there is a gap over here that we are seeing a power generation rising substantially, and we have coal output which has fallen in the last 6 months. So we will have to see if electricity generation continues to grow at the current pace. We have seen electricity output rising for the last couple of years, 5% plus kind of growth, or I would say 6 to 7% kind of growth. It could continue with a pace of 6 to 7%, but we'll have to see what is happening to the coal output, because that seems to be tapering off. That is a kind of a factor which should be considered.
Right. Okay. So if I were to now lift this a little bit, what's the smell test? Or rather, if you were to apply a smell test to this, what do we take away, and what could be the policy prescription?
Well, on a broad level, there is a demand impairment. There's no getting away from that. Obviously, with weak growth, that's a different issue altogether. The 7.5, 7.7% growth, and we're still talking about weak demand. But demand remains relatively subdued. There's no question about that. I think the government's actions, I think, will begin to contribute. in a phased manner over a period of time. Some actions will show immediate results. I think the contracts that are being provided, we've seen a very sharp rise in the number of bidders for the hybrid road projects. The 6 road projects the contracts have been put out, and there's been a sharp increase in the number of bidders. So I think that risk appetite that was missing for the last couple of years, I think is slowly beginning to come back. I think the government has taken a lot of steps to try to shift the risks in a more balanced fashion between the government and the private sector, and I think those results are beginning to see. Then the measures on agriculture, the unified markets for agriculture, these will take time. I mean, because it's not going to happen. But I mean, I think the process has begun. Ease of doing business, I think, is improving. Anjali was talking about the measures for increasing transparency in government contracts, dealings, tenders, etc. So that will happen. And so together with all of this, I think some measures will kick in the next 2 or 3 months, some within the next 6 months, some within the next year, some within a couple of years. But I think we are on the upside trajectory. Together with this, I think what we have seen in commodities, the way the commodity prices globally have picked up,
right,
I think that's been a very positive news, positive component, because I mean the kind of global risk off that had been hampering capital flows into India, I think that has stabilized. I think that's likely to help India.
Right. So Anjali, outlook for the next 3 months and any part. So considering that demand seems to be a theme that emerges at least from this discussion, and that's, I'm sure, driving a lot of what we've been talking about, how would you look ahead?
See, I think one thing that these numbers are reflecting is whatever measures that government has taken in the last couple of years are showing up. Private sector, production from the private sector or improvement in the corporate profitability will take longer. But whatever the steps that government has taken are reflecting positively. That's one. Second is that commodity prices internationally have risen. That's a positive from the investor's point of view. But then now we will have to start getting worried about how they impact the corporate profitability. Because in the last couple of years we were benefiting substantially in terms of inflation, in terms of margins. So although demand was subdued, but overall we were still sustaining. But all of that will now start to have a negative impact.
Right.
I mean, investors look at it positively and funds flow in one direction. But I think the real impact it's going to have on the consumers, on the producers, all in all will be negative. And if you look at the PMI index that was reported, I mean, the feedback that has come from the respondents is inflation is moving up, and that is fuel prices, and that is already affecting negatively.
Right.
So all in all, I mean, things are improving, progressing, but 3 months I don't see a significant change in the next.
Last word, Saugata.
Moving there, I think the government is taking a lot of serious steps in this, and together with this, the states are also beginning. Some states, at least, are beginning to move positively in this direction. We have seen fairly high FDI flows. So foreign investment is coming in. I mean, foreign investment in the dedicated freight corridor, in the Delhi-Mumbai industrial corridor. So these are large infrastructure projects, essentially multilaterally funded with low interest rates. I think these will begin to have an impact.
Right, and to add to the factor that you gave in, for instance, the Northeast, where we are seeing high pockets of demand for areas like cement and others.
That's right.
Right. We've run out of time. Thank you so much. We've got to go in for a break, but coming up on the other side, we look at how the earnings numbers have been emerging and whether they're having a real impact on the stock market. Stay with us. Welcome back to Policy Watch. Stock markets have been volatile to mostly negative in the last week thanks to a host of global factors as well as, more importantly, domestic earnings. Now, despite expectations of a weak fourth quarter for 2015-16, the markets still seem to be disappointed by earnings numbers of major Indian companies. While earnings are overall a mixed bag, with some sectors continuing to grow and others slowing down, the larger question is, to what extent do these numbers reflect the state of the economy as a whole, whether in specific sectors or in general? And more importantly, what is the prognosis ahead? Joining me to discuss this are Ajay Bagga, Chairman of OPC Asset Solutions, and G. Chokkalingam, Founder of Economics Research. Gentlemen, thank you both for joining us. Ajay, let me begin with you. The last time we met, we were just about beginning to enter the earnings season or the announcements of earnings, and there was obviously a sense that things would not go as well as hoped. Now, many earnings have emerged. The sense is that it seems to be good news in some parts, not so good news, and maybe bad news. Why are the markets still behaving like they're disappointed?
Yeah, earnings actually are pretty much on par, as per expectations. And if you see, especially US market has been reacting very positively to bad earnings because they were baked into the prices already. And same with us. Our issue is that we are liquidity driven. Totally, it's become a flow market. So the day you see FIs buying, you see the market going up. So in that, any fundamental analysis gets very difficult. So it's not really reflecting. It is an improved macro.
Right.
It is improved earnings. The forecast is looking better for the end of this year. Monsoon looks to be on track. If that comes through, it's a better market, quite clearly. Overall consumption should pick up. It's a 70% consumption GDP. So a lot of factors going for fundamental Indian market, but it is so flow dependent, and flows have become very volatile because most of the money coming in is coming in the form of ETFs, which tend to be more volatile. The sovereign wealth funds are withdrawing, especially the oil pools are withdrawing globally from financial assets. But look
Is
at
that affecting India as well?
It does.
Okay.
It does affect India.
And
And
you're saying exchange traded funds are in turn replacing, substituting, or are they coming in additionally?
they are substituting.
Okay.
So, that's why you don't get a much bigger net number. Second, you get very volatile flows. One day they are plus 600 crores, another day they are minus 700 crores. Our market can't absorb this much.
Right. And that's the reason why we are seeing this volatility that we saw in the last week or so. Chokka, if you were to break that down now, which sectors have delivered or done well in the year past, which is of course reflecting in the earnings announcements now, and to that extent the markets are also reflecting?
No, clearly only the users of oil and resources which crashed, they have done well. Otherwise, what I've been saying, single growth syndrome. You have FMCG growing volume in single digit, IT companies growing the dollar revenue in single digit, pharma again in single digit. Now the cement sector also joined, they are also growing in single digit. So there is no improvement across various sectors.
So cement has come back to single digit or gone into single digit?
It's gone down to single digit.
Gone down, okay. So from
volume
double
used
to
to be in
single.
double digit.
Yeah.
Even the value terms, many companies are posting single digit growth in revenue. So these are unusual time. I mean, it did not happen in the past. As I've been saying, post Lehman crisis also, at least the defensive sectors have grown. Now even the defensive sectors are no longer defensive. But by saying all this, I also understand the market always discount the future. I still remain little optimistic because even if you see March quarter results, there's some improvement over December.
Right.
So if monsoon is good, then few more sectors would join.
Right. So let me pick up the domestics. So one is consumer. You talked about pharmaceuticals, and you finally also. So let's talk about consumer and pharmaceuticals first. So consumer products are a larger or a better indicator. Why are they not growing faster?
Because of the two consecutive failure of the monsoon.
Okay.
That is why company like HUL, despite getting a huge benefit out of oil price crash for the raw material, still they are not able to grow the profit. They have to pass on the benefit to the consumer. That shows how tough it is for the FMCG. And pharmaceutical, unfortunately, the US FDA, for the first time in the history, we have seen every fortnight either a warning or alert or some observations coming and hitting the pharma companies. So these are all unusual developments.
Right. So now let's come to the third one, which is cement. Right. So cement, of course, would reflect a sense of what's happening in the economy as a whole.
Certainly.
But that too is, you're saying, slipping down to single digit.
That is mainly because in the last 5 to 10 years, tremendous increase in the capacities.
Okay.
And now the even the company, small company which used to have 5 lakh ton capacity, they have become 5 million ton capacity. On the other hand, the utilization is not happening at all. Right. So they are operating.
Cement is still under 70%.
70-75% utilization. Right. So it's a long way to go for the industry to pick up.
Right. Okay. So what are the bright spots in this, if any, Ajay, in terms of companies that are doing well, which could have an economic?
Yeah, I think the Indian consumer. So anything which is linked to the Indian consumer, so durable companies, again the market has run up. So might be too late. What everybody knows, as an investor, you can't benefit from it. So like cement we called last year itself, and companies ran up. Now they are slipping, as Chokka was saying. But what we think is they will get price increases. Post monsoon, you'll see more price increases coming in. And if the pickup happens in the rural economy, then cement, paints, these companies, apart from the agri-related companies. So second sector, so first is durables, second is agri-related, right from tractor makers to implement makers, pesticides, agrochemicals, fertilizers. Again, all these have been bid up a lot, Govind. So if, in fact, we were discussing just before this show, Chokka and I, that normally monsoon is very, petulant. So if it doesn't hit Kerala June 1st or 2nd, say it gets delayed by a week, you could have a massive sell-off in the market. So right now we are just sitting on cash, we are conserving cash. Let's wait and watch. Monsoon becomes too big an issue. More the global factors are factored into the market. We are not that worried. Fed will not increase rates. Today, if you look at the futures, they are showing a February 2017 as the earliest. Just 2 weeks back, it was looking like a December rate hike. Now it's showing 0, and February it's moved. June, yesterday the Fed, one of the Board of Governors person said, we are on the fence. That is all just, gaming the market. You are 8 days before the Brexit is the Fed meeting. You think before a UK vote, they will go ahead and raise rates and look like fools? If UK goes out of Euro, the markets are just going to crash. So nobody is going to raise rates. That market has figured out that there is no Fed rate hike. What is spooking the market? I think China remains a very big issue. This commodity hike that we saw in the last 2 months, that was more Chinese manipulation. In the way that markets, they had opened the commodity markets. Just to give you two small statistics, Govind, the amount of cotton last week that was trading on a daily basis in China, the number of bales were enough to make 9 billion pairs of jeans. So 1.5 pair of jeans for all people on this planet was being traded. The amount of steel they were trading was more than their annual production, and China is the monster production. Amount of iron ore they were trading, China imports 60% of the world's iron ore. They were trading that much, the 60% of global production in a day. So over last 2 weeks, now they've started putting in measures, they have increased the margins. Iron ore is down 9% in 1 week. Copper is down 5%.
So what is the relevance of this to us?
Our material stocks were running up.
Right,
People said these are value-based things. Go and buy steel makers, go and buy iron ore companies. Now again it's coming. So basic point is demand-supply mismatch in the world.
Right.
That is not going. Be it oil, be it materials. It's not going off in a rush. Good for India, as Chokka mentioned, as commodity players. But stay away from the material stocks.
Right. So Chokka, can I ask you, what is the health of India Inc.? I know that you talked about some sectors like cement, pharmaceuticals, consumer products growing, though at single digits. But if you were to expand that definition or base a little bit, is the sector healthy, and to that extent, to what extent is it reflected in the economic health of the country?
Yeah. According to me, one has to worry only about the monsoon. If there is a failure, then it's going to be a disaster. India cannot afford to have 3 consecutive failures. And second, in the 6 months to 9 months, one has to be very cautious about the rising global deflationary pressures. As our colleague is saying, in case the global deflationary pressure increases, then it's going to be a big risk. Otherwise, according to me, we are going to converge into a positive territory. There will be a massive run-up in the stock market, barring these two. You take current account deficit, fiscal balance, tax collection improvement, service sector growth coming back to 10%, forex reserves, fuel consumption, aviation, passenger traffic. You take host of numbers. Now recent turnaround in core sector, IIP, I remain very optimistic. But these are the 2 factors one has to keep monitoring.
Okay. Ajay, if we were to look ahead now, prognosis for the quarter. So we obviously are waiting for the monsoons, and we will obviously discuss it again as well. But what are the non-monsoon factors that could influence the behavior of the market, either one way or the other?
I think it's more international and again flows. Fundamentally market is good, but there's no domestic flows which are coming and helping the market out. All these are baked in now, that you've done a strong monetary austerity, you've done fiscal. So I would say what will move the market? One, RBI has to come in and cut rates. I think that the corporates are still bleeding. One is that. Second will be that if there is some more structural reforms, if the parliament logjam can be moved out, monsoon is the third biggest. Otherwise, we are good in a fundamental sense. We are growing towards a good market another 6 months down the line, a good recovery. Monsoon will be very critical because of the water levels and the rural distress that it's causing. Reservoirs down to 19% of capacity. You cannot survive more than 100 days now without monsoon being spectacular. So that is much needed.
Right. Okay. So you also talked about what would happen if, let's say, a GST would clear. Are there any other policy, policy points that you would like to point to?
Yeah, I think ease of doing business has not improved,
Right.
and reining in the tax bureaucracy. I think those two have become a very big issue, especially in March end. Notices were sent off by service tax for every and any futile reasons. So the government is talking about online refunds, stuff like that. Increase the tax to GDP ratio. It's good they have brought out so many, and you would have more crorpatis in Bombay than file their income tax, and it was shocking to see that so few people are filing a crore plus return. See the consumption. So tax to GDP needs to be raised. On the other hand, you have to lay off from corporates. The ease of doing business has to improve. That has not improved
at all. Okay, right. Chokka, your outlook, final outlook for the next quarter, with or without monsoon?
No, without monsoon, we will fall 10 to 15%. Monsoon is good, we will rise about 15 to 20% by end of the calendar year. So it all leans on the monsoon now.
Right. Okay. Is there anything that might survive or might do? I mean, is there something on the economic side which we could be looking out for, minus, let's say, some of these input points that we've just spoken about?
No, the one area which can make a big difference, on related to the policy, shutting down the loss-making PSUs. That is an area where, even the present government has not done anything. There was no point in, for decades infusing money. And second, the PSUs which are involved in the commercial business, sell them off. Like Hindustan Zinc, when it was sold, the market cap was less than 1,000 crore. Today it has run up, from there 30-40 times. So you can create a lot of wealth for the government and shareholders and improve the productivity in the system by doing these two initiatives.
Right. So if the markets were to come back, particularly if the monsoons are good, then use that opportunity very quickly to do some of these disinvestments and possibly privatizations.
Less government, I think less government, more governance, which was the mantra, that has to come back. The petty bureaucracy is really holding the growth of this country.
Right. Okay. We've run out of time. Thank you so much. We've run into the end of Policy Watch this week. We'll be back next week, same time. Thanks for watching.